Chen Long, Secretary General of Alibaba's Luohan Academy, recently spoke at ADBI on the future of financial services access and use in underserved areas of Asia and the Pacific as digital development accelerates. In this podcast, Chen describes inclusive finance challenges and opportunities in the fintech era and signs of new breakthroughs in the region.
Good finance is finance that is accessible, affordable. It has a variety of services that satisfy different needs. And finally, and crucially, it's sustainable. Now, this four goals sounds simple, but I think I would argue it almost never happened in human history. So if I have to summarize the key challenges in finances, I think there are at least two. The first is that sometimes we call this the 20/80 rule. So only 20% of the companies and the wealthy people have adequate financial services globally. And there's too many people, or especially SMEs, do not have adequate financial services. And the second challenge is that even in the areas when finance is available, finance actually tends to chase its own goal rather than serve the real economy. I want to talk about how digital technology can make a difference in this regard. The newcomers tends to embrace it with much more enthusiasm, according to a survey from the United Nations. And it asks the percentage of people who would welcome mobile payment. And in countries like India, Indonesia, China, about like 90% of people think it's good. But if you go to look countries like Japan, Germany, and many others, France, it's like 30%. So more advanced countries, they have more mature services. So the emerging markets has advantage. They could move very fast. Why is the emerging market they want to embrace this much faster? Because in the emerging markets, like you have close to 2 billion people do not have the transaction account. Of course, they want to embrace it much more. Mobile internet and the IoT, it connects all of us together. And then it's the big data, AI, and the cloud computing. It means the way we gather information, process information to assess risk is changing. And finally, both big data and the blockchain are building trust systems. These are the building blocks of technological building blocks of finance. If they are changing, that's the way we do finance. The efficiency we do finance are changing. I think emerging markets can do wonders if they embrace technology quickly.
Chen Long points to the acceleration of fintech-driven financial inclusion in the People's Republic of China, or PRC, as an example of its transformative potential.
In the past 10 years, we experienced in China's it's the e-commerce. China's online consumption accounts for 1% of retail sales back in 2009, which was below actually many of the other countries. But in the past 10 years, China has transformed itself, becomes the leader. Its online consumption accounts for about 1/4 of the retail sales in China. So both in terms of amount and the percentage, it leads in the world. So a lot of people know China is rising, but I think what's understated was that China's economy, it's not only more and more consumption driven, it's also more and more e-consumption driven. So transform itself into a mobile style lived country. China's mobile payment was roughly on par with United States, which was nothing back in 2011. After 7-8 years, China's mobile payment is like trillions of US dollars, which is like hundreds times of United States. Also, China has more than 1 billion internet users. The majority of them are mobile payment users. So again, China, talking about inclusion in terms of payment, China has done, I think it's a miracle. And also it's not just very accessible, it's also very safe. The fraud loss rate for Alipay's mobile payment, fraud loss rate was lower than 1 millionth, which means I have to meet roughly 1 million people to meet one person that's going to lose money. Now, in the United States, we know that the costs charged the merchants, and the fee is around between 1 or several percent. In China, it's lower than 0.6% or lower, so one scale lower. And regarding the P2P transfer, the money transfer, the United States is about 1%. Depends on who's providing it, but in China is free, P2P. So we actually use the mobile payment service, so transfer even a penny, 1 RMB. You don't use the POS machine, post machine, because that's expensive. You see, talking about SMEs, you just need to have a sheet of paper. You use a QR code, it just reduces the threshold down to like zero. It's literally zero.
Chen Long explains how developments in fintech and microlending are making it possible for more startups and entrepreneurs to gain access to finance in a way that sidesteps traditional bank lending barriers.
On Alibaba's platform, we have more than 10 million active SMEs, startups. Half of the entrepreneurs, I'm not talking about the employees, I'm talking about entrepreneurs. Half of them are women, and the majority of them got the financing, microlending right from early stage from us. For the banks, you can see that the initial cost probably several thousand RMB for banks. It's not worthy for them to provide loans only several thousand RMB. We try to work with banks. We give them 100 users. We tell them these are good, trustworthy users, but they really turn the top 2 into the bank borrowers. The rest of them, they return to us. So we were forced to start to use the big data. We have provided funds to more than 20 million SMEs. The average loan size is only 30,000 RMB. We're a very small amount, very distributed because of the technology. In China's commercial banks, more than 80% of the commercial loans are collateral-based. It's very hard for SME to get much of it. But this is the age that information becomes a collateral. So that is very related to the inclusive finance we're talking about.
Chen Long concludes by projecting how changes in finance will impact financial inclusion and the broader economy in the future.
The number one trend is that digital technology is making finance much more integrated with the real economy. So traditionally, finance is separate from the use cases, from the supply chain, production, sales, social network, whatever it is. It's just separated. You just have to go to the banks when let's say 9 o'clock, 10 o'clock, tells them exactly what you need. But now they're much more integrated, you see, because the economy is being digitized, which means and that provides the information. And that information also it solves the 2 key problems in finance. Firstly, it helps the finance providers to know the demand for finance in real time. Okay. Secondly, it actually have real time information to assess the risk. So that's why we see the finance can go so fast, so much more inclusive in a short span of period. The second trend is that finance is becoming more and more user-centric. Okay, so traditionally you can get access to finance. You see, traditionally it's the insurance, payment, banks. They all provide finance in separate ways. They do their risk assessment separately. But more and more, I think they will become much more user-centric. It's just like happening in any other industry, and then it's also happening in finance.
This has been Asia's Developing Future, brought to you by the Asian Development Bank Institute in Tokyo. See the show notes for the transcript and related material. For more information about us, please visit adbi.org.